just share with you some of the exempted employment items. Okay? I'm sure all of you are aware of this. These are the 17 exempted allowance that was introduced by the tax authorities, including all the traveling allowances, meal allowances, all the per diems and all that. Do you remember? It was announced in 2008. Some of them actually have already finished and phased out in 2010. Yeah? Now, I think what's quite obvious here that many of us as employees can't really do very much about this, right? It's all company policies. But as the tax profession, we have actually gone into study with how to maximize employees' taxabilities with corporations to ensure that their policies are well planned, okay, from a tax perspective. Bonus is another area that has changed over the years. Again, I don't know how many of you remember in the past where bonus, if it's paid for a prior financial year, for example, is reported as a prior income. Yeah? Remember the prior column in the tax return that you got to fill? And then all that complexity or difficulty starts when you don't know which monthly tax amount to offset it against, or you accidentally overutilize it for the current year and forget about the JA, the additional assessment that will be issued later on to offset. So you've got nothing to be offset against that bonus, and then you've got to be out of pocket from taxes. You know all this complexity? Do you remember? Now, the tax authorities since 2009 have rectified this. So bonus, it doesn't matter which year you earn it for, it's reported as a current year income, the year of receipts. Okay, so that simplifies matters. The monthly tax is also deducted at the point of receipt, so no, funny matching and all that to deal with anymore. So very few items now actually is required to be reported as a prior income. Yeah? Let me just close on employment income with some of the lump sum types of payments, the exit type payments. Okay? And I can actually break it into two large categories. One is payments for, gratuitous payments for your services. And here we are talking about the gratuity types of payments. Okay? Upon retirement, you get a lump sum for thanking you for all those years that you've served the organization. The other type of payments has to do with compensating you for losing a right. Okay? So these two broad categories. How do these two differ? Other than the fact that the tax law is under two different sections, okay? How is it different? A gratuity is taxed because it's for past services, okay? It's spread back over 5 years. Again, 5 years because of the statute of limitation, over 5 open years, yeah? So it's spread back over a maximum of 5 years. So you will see additional assessment for the 4 years prior to the current year, okay? For a gratuitous payment, you get, if the gratuity is received when you retire at 55 and you've worked 10 years with an organization, that amount is completely tax-free. Okay? So that's an exemption. If you get a gratuity for leaving an organization due to ill health, again, it's a completely tax-free payment. So a lot of planning also can surround lump sum payments when a person exits from an employment. Okay? Sorry, let me just touch on this. We see 55, right? Some of you might have the question as to the increase in retirement age to 60, right? So gratuity exemption at 55, does it still apply? Yes? Yes. The tax authorities, the Income Tax Act, has not changed it to 60. It still remains at 55. Likewise, the EPF rule on withdrawal at 55 still applies. But the EPF law has not changed either. to align it with the increased retirement age. Okay, so no change in EPF law, no change in income tax law. Okay, the other category or the other type of exit payment is a compensation type. Okay, let me list down some of the types of compensation that we're familiar with: severance pay, redundancy pay. Yeah, if a person is restricted from carrying out certain things, so a restrictive covenant. When an employee leaves the organization, he's restricted from carrying out certain types of roles, for example. Okay, a restrictive covenant is placed on this person and you pay the person a compensation for restricting that right. That also comes under a compensation for loss of employment. Okay, court proceedings, legal court proceedings for unfair dismissals and things like that also comes within compensation for loss of employment, but analysis needs to be done as to put it into pockets of, because they're always, the incurrence of legal fees, for example, okay? The incurrence of, on top of compensating a person for being unfairly dismissed, the person might also get a compensation for undue stress for this period of, having to deal with being laid off and things like that. Certain categories the tax authorities have confirmed could be deemed capital in nature, and hence not taxable in Malaysia. As long as it's not income, okay, and it's not capital gains arising from real property. We have a very restricted capital gains regime in Malaysia. Yeah, capital, any payments that comes into a capital element type, okay, is actually tax-free. So some planning around this as well, it's possible. Okay? So, anybody has any questions on VSS? A VSS payment. Is it a compensation for loss? Why is it important to see whether it's a compensation for loss of employment and not just any other employment income? Because there is an exemption available, okay? 10,000 per completed year of service with that same employer or within that group of employee, of companies. So you get an exemption for against the payment that you receive, okay? So is VSS payments considered compensation for loss of employment, and hence you're able to claim that exemption? The tax authorities say yes. Okay? The legislation actually specifically covers voluntary separation scheme. Now, how a voluntary separation scheme differs from a redundancy type of exit is that the choice to leave the organization is on the employee, right? Because you choose whether or not you want to leave the organization. But the tax authorities have confirmed that they also see VSS payments as compensation for loss of employment, provided you don't provide other means of re-employment for that individual. Okay? Compensation for loss of employment is paid in the year of exit, unlike gratuity when it's spread back 5 years. Okay? Now, let me just cover one last category, pensions. So when you leave an organization, if your employer has been contributing to a scheme for you, okay, it can be a government scheme, it can be a private scheme, is a withdrawal either when you leave the organization or later on in life, is it subject to tax on you? Okay? So it's important actually to determine that. In order to determine that, it's important for you to try and categorize them between what are approved funds and what are non-approved funds. Okay? Clearly, EPF, and when I say EPF generally, I also mean all the government schemes like the QOP, LTAT for the armed forces. Yeah, I mean all the government schemes. Now, all those government-approved schemes are clearly, exempt on the withdrawee. Okay. Okay, that's a very good question. I will touch on it. Okay? Pension funds. Certain pension funds are approved by the tax authorities under Section 150. Okay? These are specifically approved by the tax authorities. So that organization actually has to write into the tax authorities and specifically ask for that fund to be approved. Okay? In the past, we see that happening a lot. For example, like the Shell retirement scheme has always been an approved scheme under the tax authority Section 150. Okay? More and more we are seeing that all that phased out because of the prevalence of other types of private retirement scheme. In 2012, the authorities provided a new framework this is actually to encourage people the general public to save for retirement. Okay? So there was another type of approved fund called the Private Retirement Scheme, PRS. Okay? A PRS scheme is actually approved by the Securities Commission under the CMSA Act. A fund that is specifically approved, now actually we have, I think, 8 providers at the moment in the market. Okay? As long as you contribute to one of these 8 approved providers in the country, okay, you will get, firstly, a relief. I'm not touching on relief here because I'm leaving it to my colleague Ping Ping. You will get a relief when you, remember the relief of 6,000, yeah? 6,000 is for EPF contribution for life insurance premiums. Now the tax authorities added an additional 3,000 for contributions to PRS. But that PRS needs to be an approved scheme by the Securities Commission. So it must work around a certain framework that the SC has approved. Okay? So you get additional 3,000. So the claim that you can make is that 6 plus 3. Okay? That 3 is PRS as well as they announced last year, the annuity, deferred annuities, any deferred annuity schemes. Again, it must work around some defined framework. Okay? So 6 plus 3, remember, for the relief.